Bitcoin is beginning to look really strong. In the last episode, we talked about how the ideal situation would be for Bitcoin to find support on this ascending channel and then bounce up strongly. And that's exactly what's happened since. And as for now, the only thing standing between Bitcoin and new all-time highs is this horizontal resistance and the EMA 50 on the daily. So far, Bitcoin has been rejected no less than 3 times from this CMA, but as we also know, the more times a technical resistance is being tested, the weaker it becomes. And not only that, the more times it's being tested, the more pressure is being pent up. Hence, if we were to pass this final level of technical resistance, I don't see why Bitcoin wouldn't be ready for new all-time highs. And we're talking 6-figure Bitcoins. Let's move on to the weekly chart, where we're gonna look at the 21 moving average. And to those of you who may not know, the 21 moving average is the default moving average on the weekly. And this also applies to Bitcoin. And with regards to Bitcoin, this 21 moving average has acted as a highly reliable historical support, and particularly so during the 2016 to 2017 markup, during which it didn't fail us even once. For as you can see, upon every occasion that Bitcoin tested this 21 moving average, it did find support. We did see a couple of wicks below, but apart from that, it bounced reliably as clockwork up on every single occasion. And what then do we have now? Well, since Bitcoin started to trend in September last year, we didn't really test it whatsoever. What happened then was that Bitcoin dropped by 55%, but after that, after Bitcoin bottomed out, it did immediately find support in late September and early October, upon which it took off again. Now, given how many times Bitcoin tested a 21 moving average amidst the 2016 and 17 run-up, I would certainly not be surprised if Bitcoin were to do the same once more now before taking off again. But here's where things get truly beautiful. If we look at Bitcoin on the regular chart, as in the arithmetic chart and not the log chart, we can see that Bitcoin still has some downside to go before meeting this diagonal trend line, which also coincides with the EMA 200 on the daily. This little cluster is the next area of support on the downside, for we must not forget that we're still trading right at resistance and at the EMA 50 on the daily. Still, anything can happen. We shan't take anything for granted before the fat lady sings. And this area right here, right above this resistance box, this is when we can start to sing. And for that reason, a drop down to this area at around $51,000 to $53,000 doesn't really scare us as much as it did a couple of weeks ago. But there is another key reason for that as well. If we move on to Ethereum, we can see that it's still respecting this diagonal trend line. Over the last few days, Ethereum has seen a 22% price pump. And upon this pump, it has left us with a good distance between the current price level and its diagonal support. This gives us the leeway we need for Bitcoin to potentially drop down towards the $51,000 to $53,000 level prior to being ready for a significant pump. In this sense, Ethereum has some 7 to 10% realistically speaking before retesting the diagonal line again. And if we compare this to Bitcoin, that perfectly coincides with those numbers. Again, 7 to 10% in Bitcoin too. For this reason, as strong as this support cluster in Bitcoin may have been, the one that we've obsessed about since about here, that very minimum support has now been replaced with this one. And what this in turn does is to give us even more leeway to the downside for Bitcoin to still remain bullish. And this in turn means we don't have to sit on the fence and chew down our nails for Bitcoin to go down to this level before turning bearish. It can actually go as far as this. And just as this very area was the ideal buying spot that we positioned ourselves accordingly last week, we no longer need to fear a potential tiny breakout from this ascending channel. But normally speaking, a break from a channel is not good news, but given Ethereum's recent pump that gives us leeway to the downside, in combination with the support cluster on the regular chart, things do look good indeed. And to further praise that support cluster, it does as well coincide with the 21 moving average on the weekly, the very one that we last tested in late September and early October for perfect support. If on the other hand Bitcoin were to break below and close below this, then put on your crash helmets, for we're gonna go down fast. With that said, I don't think that's gonna happen, and I have good technical cause to say so. Now, to those of you who follow me on Algir, I did release a lower bullish red RSI buy signal the other day, based on the 1 hour chart. And this in turn, as in the 1 hour chart in Marathon, might be the most reliable chart I have ever seen to date. Sure, it stops us out every now and then, yet remarkably rarely, but based on its track record alone, it is unparalleled. And to be perfectly clear, this buy signal, which was given 1 hour after market opening 2 days ago, as in on Tuesday, was a mere confirmation of the Marathon purchase we did last week, the one that in turn was based on this very level in Bitcoin. Since this lower bullish red buy signal was given 2 days ago, Marathon has already rallied by 17.5%, and we're talking over the course of 15 trading hours. And this is just how powerful these strategies are. Sure, they do get stopped out every now and then. On the 15th of November, for example, we got a buy signal right here, and that one was immediately stopped out at a few percent loss. With that said, in late October, we got a signal right here, one that I didn't identify myself, upon which the price took off by 73% at most over the course of 82 trading hours. Now, my game plan is rather simple, for if this RSI signal were to get stopped out, I will release all of my Marathon position, but with the anticipation of rebuying it all once Bitcoin drops down to this aforementioned level, as in $51,000 to $53,000. And the reason for this is that stopped out lower bullish red buy signals have an invariable tendency of taking whatever prices it may concern to lower levels. And in this sense, lower levels may very well mean this cluster support. And such levels in Marathon should, as previously mentioned, neatly coincide with this support cluster at around $44 to $45. Not gonna go into that cluster level again, but if we were to eventually get there, I'll keep you in the loop. Now, in this instance, given the overall technical picture, Bitcoin does indeed look strong. If it could break above and close above this horizontal resistance level and the EMA 50 on the daily, then fasten your seatbelts, because we may go up fast. Yet if on the other hand Bitcoin were to drop down to this next cluster support level, we will not be scared off. This is where we'll sit tight. However, if Bitcoin were to close below this, especially so on the weekly chart, then it will be a dark and miserable Christmas for many a Bitcoin moonboys. Yet not for us though, because we will be safely out of the way by then. Yet with that said, if this cluster support were to break, as in Bitcoin closing below it, I am out of here, yet at a very marginal risk. For that's why we're here. This game spells risk to reward. On a final note, yesterday I listened to an interview with one of the most successful traders in the world. He's a young Swedish guy, my age, who started off with a few grand in 2013, which he's ever since turned into no less than $80 million. He said that his overall hit rate for his trades lay between 25 and 30%, and that whenever he looks through his trading history, it's, quote, a sea of red. Yet he's managed to increase his portfolio by an average of 270% a year for 8 years straight. And all this through thousands and thousands of trades, of which most of them were losers. And that does once again prove that we're not here to predict the future. We don't know what's gonna happen, we just let the odds have their say.